Okay, we started it back up. So I don't mind sitting here. It doesn't bother me to sit here and continue this video. I just um, I just don't want to do all this and not be able to post it because YouTube says it's too long. Let's see, they're trading at $1.41 right now on those calls. My entry is $1.23, so it's not a bad. You figure $1.23 to get 20%. $1.47, $1.48 would be 20%. Um, but we'll take what we can get. If we get there, great. If not, like I said, I'm gonna honor my stop here if we need to. And we're above the Bollinger Band. That's not usually a good sign. Usually, when you close above the Bollinger Band, you're going to get a little bit of a pullback. It's Bollinger Bands are oh, standard deviations. I forget what it is. I think it's two standard deviations by default. It's two standard deviations. Um, so it's basically it's a volatility measurement, volatility tool. When the bands are expanded like this, you have more volatility. When they contract like this, there's less volatility. You see right here, they really start to open up because we had this big pop here. So the tighter they are, the less volatility. And I don't really watch them religiously, but when I do, um, what I do look for is when they start to open up. When they start to open up is when you usually start to see a move one way or the other. And you see right here we have a bearish engulfing forming. We have 2 more minutes for this candle, but we do have a bullish engulfing forming at a resistance point. So have to see what happens in the next minute now before this candle closes. If it closes with a bullish engulfing, I'm going to sell one of these, regardless of what the price is at. I'll sell one, and we'll see if it bounces back or what happens. It may continue down after that. It might only continue down just a few more cents and pop back to the upside. But I do want to. I'd rather not carry both of these two back to break even. And I'm not real confident now at breaking above that today's open. So I'd rather sell one and lock in just a little bit more profit. So that's not a bullish engulfing. We ended up. And the reason it's not is because it closed above the previous candle's open. See, the previous candle's open was where's it at? 280.34, and this close was 280.35. So we closed above this candle's open, which is why it's not a bullish engulfing or a bearish engulfing. If we were to close below this open, then it would have been a bearish engulfing. And I know 1 cent doesn't sound like much, 1 or 2 cents doesn't sound like much, but it makes the difference. The algorithms, a lot of these firms run algorithms. Algorithms look for strict criteria candles. If it's not flagged as a bearish engulfing, the algorithm's going to ignore it. So that's the difference between a penny or two. Algorithm, if that would have finished, if that would have closed as a bearish engulfing, it doesn't. Their algorithms are real complex. It's not just going to say, oh, there's a bearish engulfing, let's sell or let's short. But If it closes as a bearish engulfing, their algorithms are going to say, hey, let's take a closer look. There's no bearish engulfing, so it's going to ignore it. So, not saying it still won't go down, but there's a lot of money floating around these firms when these algorithms kick in. You want to be on the same side as them, because usually whatever they do is what they really have a strong determinant of price. So, not saying it still won't drop, but it's probably, if it does drop, it's probably not going to be the algorithms doing it. It's just going to be retail and the floor traders. So, but yeah, back to talking about Jeff Williams, Davis Martin. I've traded in a lot of other chat rooms. I'm not going to mention their names because I'm not in their rooms anymore, and I didn't want to mention Jeff or Davis without getting their okay. I'm not in the other people's chat rooms anymore, so I don't have the ability to reach out to them to get their okay. So I'm not gonna put their name in here, but there's a few other ones that I was in, and there was a couple that were good. There's one, I was in his room for a little while. I didn't have much success in it, but it was more my fault. He is very successful, very good trader, but I was just getting back into trading, and I hadn't really read a chart for a while, and that was my fault that I wasn't successful at it. If I would have been more patient and got back into reading charts again a little bit better, I might have just stuck with him and still been trading with him. He's very good, but again, I don't want to mention his name because I don't have his approval to, and I don't. I will say he specializes in biotech stocks. Young kid, so you could probably do a search and figure out who it is. But yeah, he's a very good trader. There's a lot of good mentors out there. Like I said, I'm in with Jeff and Davis. I'm happy with it, and I'm not planning on going anywhere else. I don't plan on jumping ship. I've done that before. I've jumped ship. I've went to because I thought this person had a better service or this person had made more money, and I jumped around, and in the end I ended up back where I started with Jeff. So when I was with Jeff originally, Davis wasn't in there, and it was just pretty much penny stocks. And like I said, I did good with it, but I wanted to do options, and there was no options trading going on in there. I found out that Jeff had another guy in there now that was working on with options, and I looked into it and I jumped in. So, yeah, but so we're kind of holding right at this level here. I'm not going to stay on this too long. I've already been in this for probably these two recordings combined, probably 50 minutes now. I don't think most of you, I know I don't like watching a 40-minute video. I probably should have cut that other one off a little bit earlier so it wasn't quite so long, but I had planned on cutting this off earlier, but like I said, I saw that entry and just I kind of had to jump in that, and thought it would be a good, entertaining and educational to see me jump in that and explain it as I go. Like I said, I know I really like watching live trading, but I see Jeff Williams just posted at 2:35 p.m. that he sold some calls, SPY calls, for 12.6% gain. So Jeff specializes in lower price stocks, but he does do a little bit of options trading. Yeah, he's told us that he's learned a lot from Davis, so he'll do some options trades occasionally. He doesn't alert those through text and email, but he will do them. So yeah, he posted he made 12.6%, and Jeff's pretty conservative when it comes to options. He actually played at May 8th, 278 calls, so he went pretty far out. Unless that was a typo and it's supposed to be March 8th, but he put May 8th. Let's see what March 8th is a Friday. May 8th was a Wednesday, so he may have went with May 8th. So, one of the moderators this morning sold Tesla. He bought and sold Tesla puts right near the open for like 50%. Let me go back and see if I can find it. He's like this Tesla guru. We have another guy in there they were talking about. It's like every morning he posts he made $1,082 on SPY options. It's always $1,082. It's kind of funny. But he buys 100 contracts and looks for 12 cent gain. So it always works out to $1,200 minus his fees, but it's always $1,082. So it's, hey, I'd love to do $1,082 every day. I don't know if he does it every day, but it seems like it. Here at 9:52 a.m., the moderator put Tesla puts, March 1st puts, and I'm going to say that was 9:52. Yeah, 9:52 he got in Tesla puts. He got out at 9:56 in 4 minutes. He paid $217. He sold them at $330. He made 52% in 4 minutes. And that's pretty common for this guy. He's a Tesla guru. So he's one of the moderators in the Traders Council. So, and I've talked to this guy. He's actually the one that gave me the pivot points. I've talked to this guy several times outside of the chat room, and he just started having success about a year ago, right after he joined the Traders Council. He said before that he struggled, just like a lot of us. He struggled. He joined the Traders Council, and he said it just putting all the pieces together, and it clicked. And it's not every day, but a couple times. Seems like a couple days a week he's posting huge gains, and he tweets out his screenshots, and he's not just playing one contract on these. He's playing serious money. So more than I'd be comfortable with. I know that. But again, I said it before, I'm very conservative. I don't like to lose money, and if I do have to lose money, I want it to be as little as possible. So, and I know that hurts me as far as making money too. It's going to limit what I can make. SPY got a little bit of juice there. It looked like it was trying to break out over today's open. And if you look, it's hard to see. Let me see if I can. It's kind of hard to see on this chart. I can see it on my other chart, but the stochastics are actually pulling down slightly. Right now we're in a little bit of an overbought condition starting about here. You see the stochastics up above 80. So it's a little bit of an overbought condition. When a stock trades sideways and consolidates, it helps relieve that overbought condition. Um, when a stock gets up here, people are, is it overpriced? Is it, what's it doing? What's it going to do? As it trades at this level, people get more comfortable with saying, okay, this is its comfort zone. And the stochastics, MACD, whatever you're using, will start to cool down and actually decrease a little bit, which relieves the overbought condition. Um, so that's what consolidation does. Consolidation will ease an overbought or oversold condition um, by letting the indicators, the stochastics or MACD, cool down. Um, which is why sometimes, a lot of times, you'll see a stock will move one direction, consolidate for a while, and then continue in that same direction. Because that consolidation eased that overbought or oversold condition. So, yeah, we're getting a pretty decent pullback here. We're definitely showing a bearish engulfing now. Just because of time, I'm going to go ahead and unload one of these. So I'll unload one more. Well, that's Tesla. I'm looking at the wrong thing here. Alright, let's unload one at about $1.30. Yeah, it's really pulling back now. Okay, I got rid of one more at $1.30. Yeah, we're getting pretty good size pullback here. If this closes bearish engulfing, I think I'm just going to, unless we have a long tail, I think I'm just going to close that last one too. Not for any real particular reason other than this recordings. I know most of you that view this aren't going to stick around and watch the whole thing. So, and it is a paper trade, so I'll just close it out and move on. But I might, now that I'm doing these videos, I know when I started this paper account at $2,000 in August, my initial goal was to get it to $5,000, and I thought it would take about 6 months. It actually took about 2 months. And since I did it so quickly, I was kind of thinking maybe I'll just go to 10,000 now. But I kind of abandoned that and went back to real money trading. But now that I'm doing the videos and using the paper trade account, I may just stick with this till I get it to 10,000, and we'll see how long it takes. Right now we're about 6,500. See how long it takes me to get to that 10,000. I know when I went from 2,000 to 7,000, that was only SPY options. There were no credit spreads, there was no penny stocks, no real stocks. It was all SPY options. And you see now I am doing some credit spreads and a few other things in there. But we're going to start a new candle here, and it's going to be a bearish engulfing. So we did get the bearish engulfing here. And you see the stochastics coming down below 80, so we're probably going to get a little bit of a pullback here. So I'm going to go ahead and get out of this last one. I'm just going to do market sell, get out of it. So that one sold at $1.27. My entry was $1.23. So altogether, I made $33 on those 4 contracts. Not great, but at one point I think I was up $54. So I see a paper trade, and I talked yesterday about E-Trade having a new paper trade account. Jeff Williams actually is one of the select few that has got access to that. I guess they're only letting certain people use it. Jeff is a high volume trader, very active trader, so and he's been with E-Trade for a long time. So they let him have one of the paper trade accounts to test it. I see he just posted a paper trade March 8th, 279 SPY calls. He entered at 249, so his winning percentage is pretty high on this stuff. So if you're interested, watch and see where they go. I'm not going to stick around on the recording for that, but he entered a March 8th, 279 SPY calls at $2.49 on a paper trade. He's testing out this paper trade account for E-Trade and reporting back to them on what he likes and doesn't like and would like to see changed. So he's using a paper trade account to just to test it out. So anyway, that's today's videos. So what started out to be a very short video ended up being, we're probably pushing close to an hour. But I think it's worth it to watch these live trades. Yeah, I don't know. I wouldn't enter calls here, but you know, Jeff knows what he's doing, so I'm not going to question that. But this wouldn't be my entry for calls. I would either wait for a pullback back to here and hold this level, or a break above today's open. That would be the only way I'd enter calls right now. But that's me. Like I said, I'm not going to question Jeff because he's pretty successful at trading, obviously. So he must see something I don't. He might be following. I know he follows trend lines a lot, so he might see a trend line that he likes. I'm not really much of a trend line trader. I don't care too much for using trend lines. But like I said, he makes them work for him because obviously knows what he's doing. So, alright, that's it for today. Get another video out probably Monday for you. And good luck with your trading. Post any comments or questions in the comments section. Suggestions, ideas, whatever. If you like what you see, give me a thumbs up. Subscribe, whatever. Like I said, I'm just trying to pay it forward here. If I can help somebody, and I think my main motivation for this whole thing is just to try to help myself a little more. I review charts. If I review charts at the end of every day, it keeps my mind in it. I know some days I get busy with work and I don't really have time to look at charts. So this is a chance for me to be able to keep my mind sharp by looking at charts, and I point out things that I see, like this pivot point. A lot of times I'm busy during the day and I don't notice this till after the fact. So it's good to go back at the end of the day and say, oh, look at that. And it's that's my main reason for doing this. But hopefully I can help somebody out along the way. If anybody has any questions, I'm like an open book. I'm not, hey, I'll be up front with you. I blew out a pretty big account about a year after I started trading. Not ashamed to admit it. But I've learned what not to do, and I plan on not doing that again. And I'm doing everything I can to make sure I don't do it again. So, pretty much an open book. So if you have any questions, I have no problem giving you a straight answer on it. This isn't easy to do. It's easy to learn how to read charts. It's easy once you learn how. It's easy to go enter and exit a trade and probably make some money at it. What's hard is the mental side of it. That's the hardest part. That's something. There's a couple good books on that I've read. Mark Douglas is one author. He has a couple books. I think one's called Trading in the Zone. I forget what the other one's called now. I'll try to look those up. Get you, I'll put that in here. I have no affiliation with Mark Douglas. I've never met the guy. I've never talked to the guy. I know nothing about him other than what he put in his books. But the books are very good for the mental side of trading. He's Trading in the Zone, and I forget what the other one is now. But yeah, uh, I'll try to remember and I'll mention it Monday. But just look up Mark Douglas. Look up his books. A lot of people in our chat room have said they've read his books and they've helped too. Mark Douglas was a real trader. I think if I remember his story right, he was a floor trader in Chicago. If I remember right, he lost everything, and he had to change his mentality, and came back and ended up being very successful. And he talks about that in there. So definitely something to check out. Mark Douglas, Steve Nissen. Um, that's two sources I definitely uh, respect and would suggest. And as far as mentor services, Traders Council, I don't think there's anything better. Um, there's people in here that have been in several other services, and they've all said that this one is the best one they've ever been in. And we have fun. Friday afternoons, about 3:30, they crank up music, kind of a stress reliever. We have a lot of fun, a lot of joking around, a lot of goofing around. Um, it's a lot of fun. It's good to laugh, relieve some of the stress throughout the day. So um, some of the stories that are told in there, pretty good. But yeah, all right, I'm gonna cut this one short, or no, not short. Cut this one long. Cut this one off and get these posted, and I'll see you Monday. Thanks.